Yeah, the block of structure here. Yeah, because from here we can see that market was moving towards the downside like this, right? So market was on a downward movement, and when market got here, this was the lowest low created here. This was the lowest low created, right? And market was unable to break this low. So, and look at something here. This is the lowest low, and the inducement that caused this break of structure to the downside, which resulted to this lowest low, is this, which is this one, right? This is inducement. So after taking the inducement, let me mark out the inducement for you to see. This is the inducement here. So let's say inducement here. So you see, so market took out the inducement here. You can see it here. Look at this with this candle this week. Took out the inducement, then market came down, but was unable to break this low, this lowest low. And there was an SCOB candle created here. You see, as I marked it out here. So I was like waiting for price to get back to this SCOB candle here, so that I will go long in the market. You see, I will buy the Euro USD, but price didn't get to this SCOB candle. So we have to be dynamic in we flow with the market. So I marked it out, and market started going up from here without mitigating the SCOB candle. So at the break of this high here, then market created internal chalk to the upside. So now market is trying to shift to the upside. So here now look at, and mind you, there was another inducement here, yeah, that's led to the breaking of this previous low here. So market tried to take out the inducement but didn't get to take it out, and market went back again, price went back again. So on the break of this low, this high created here, then we now confirmed our market shift to the upside. That's the structural shift to the upside now has been confirmed here. So which led to the break of our structure here. So now at the break of this structure, now look at something here. Market also left what's it called, inducement. You look at this inducement, right? But on the other hand, this is our inducement. So we were to wait for this inducement, and probably price take out this inducement, then see liquidity pool around this place. Yeah, let me show you. See the liquidity pool here. Where is this thing? Yeah, see, we have liquidity pool here. So we like to wait for market to take out this inducement and liquidity pool before mitigating our SCOB candle here. So now market didn't take out this inducement, but rather continue on the uptrend. So we have to flow with the market, right? So now, and as market was moving up, creating inducement. Now look at this one. This is another inducement here, which led to the break of here. There was a break of structure here, though it's weak, but it's also considered as break of structure. And market came back to take out this inducement here. Look at it. This is the inducement. This is the taking out of the inducement here. Now look at it. Right. The inducement was, you see, a market went up, creating another high. You see, market came up, created another high here. So as we can see, we see that gradually the price is moving up. So it has finally shifted from the downtrend back to uptrend. So now, if we now go to our lower time frame, which is 15 minutes, we'll see that there was when market broke this structure here. This is as we marked it from our higher time frame, 1 hour. So there was imbalance. There was imbalance left here. You see the momentum. So this is also we have our other block here. So I marked out this other block. I marked out this other block and waited for price to mitigate this other block. So at the mitigation of this other block, then I now move to 3 minutes to confirm market structural shift to the upside, which is in line with our higher time frame bias. So this is it, 3 minutes. So remember, I marked here already as my POI. So when market mitigated, got to my POI, I moved to 3 minutes time frame. Then I confirmed market structural shift to the upside. So look at it. So this is our internal break, internal choke here. You see, this is our internal choke. This is our internal choke. Internal choke. Market came, created this low, move up. Then it didn't. Market was unable to break this lowest low created here, and at the break of this eye here, this eye here. So and look at how market broke it with FEG with imbalance, and all these ones they are inside bar. You see this big candle, this big candle, this one, this very one, this very big candle, this one, this big bearish candle. This is an inside bar candle. You see, so when market when I confirm the market structural shift to the upside, and I marked out this order flow. Yeah, there's order flow here from here, just like this order flow. This is our last bearish movement before the structural shift. So, and I marked it and waited here for price to get to mitigate this order flow. So, and when market mitigated this order flow, then I immediately entered my buy position. If you cannot remember, this is inducement taken out here, but price could not go and create a new high. That is, price couldn't break this higher high here. So instead of moving up to this high, price further moved down to mitigate this our order block here. And immediately after the mitigation, and when we step down to the lower time frame, 3 minutes time frame, and we wait for market structural shift to the upside, and we enter this current move. And now if we look at this, we have another break of structure here. We have another break of structure here. Yeah, we have another break of structure here. And look at this impulsive move here, which left imbalance. So, and if you look at this very well, we notice that we have inducement down here. We have inducement down here. So this is inducement, and probably we might wait for price to retrace down to this side, like this. Yeah, like this, like this. We wait for price to retrace to take out this inducement. And okay, wait, let me use this one. When my wait for price to retrace, take out the inducement, then before moving up. So we wait for price to do this thing, this to make a move like this, come down, take out this inducement before continue up. So if we see something like that, then we might probably add to our position here. We might probably add to our position here to make it and we position ourselves here exactly, and target our recent high. So this one this if price come down to this to take out this inducement, then we had a position and we'll be targeting 3.66 RR. While this our previous position is a 3.03 reward ratio. So that's it, guys. Thank you for watching my videos, and I'll see you in my next video. Bye.